Public information proposes that few unknown crypto financial backers benefited from inside information on when tokens would be recorded on trades. More than 6 days last August, one crypto wallet amassed a stake of $360,000 worth of Gnosis coins. A token attached to a work to assemble blockchain-based expectation markets. Token postings add both liquidity and a stamp of authenticity to the token, and frequently give a lift to a symbolic's trading cost. The cost of Gnosis rose strongly, from around $300 to $410 soon. The worth of Gnosis exchanged that day flooded to in excess of multiple times its 7-day normal. 4 minutes after Binance's declaration, the wallet started selling down its stake, exchanging it totally in a little more than 4 hours, for somewhat more than $500,000, netting a benefit of about $140,000. And an arrival of generally 40%, as indicated by an examination performed by Argus Inc., a firm that offers organizations programming to oversee worker trading. A similar wallet exhibited comparative examples of purchasing tokens before their postings and selling rapidly after with undoubtedly 3 different tokens. The crypto environment is progressively wrestling with migraines that the universe of conventional money handled many years prior. The breakdown of a supposed stablecoin from its dollar stake prior this month originated from cryptos of a bank run. The center comes as controllers are bringing up issues about the market's reasonableness for retail clients, a significant number of whom just reserved significant misfortunes on steep decreases in crypto resources. The wallet purchasing Gnosis was among 46 that Argus found that bought a consolidated $17.30 million worth of tokens that were recorded soon after on Coinbase, Binance, and FTX. The wallet's proprietors still up in the air through the public blockchain. Benefits from deals of the tokens that were noticeable on the blockchain added up to more than $1.7 million. The genuine benefits from the exchanges is reasonable altogether higher. Nonetheless, as a few pieces of the stakes were moved from the wallets into trades as opposed to exchanged straightforwardly for stablecoins, are different monetary forms, Argus said. Argus zeroed in just on wallets that showed rehashed examples of purchasing tokens in the approach of posting declaration and selling before long. The examination hailed trading action from February 2021 through April of this current year. Coinbase, Binance, and FTX each said they had consistent strategies denying representatives from trading on special data. The last 2 said they investigated the examination and established that the trading action in Argus report didn't abuse their strategies. Binance's representative additionally expressed the wallet addresses were not generally connected to its workers. Coinbase said it conducts comparable investigations as a feature of its endeavors to guarantee decency. Coinbase chiefs have posted a progression of websites addressing the issue of front-running. A few legal counselors say that current criminal rules and different guidelines could be utilized to pursue those trading cryptocurrencies with private data. Be that as it may, others in the cryptocurrency business say an absence of case point of reference well defined for crypto insider trading has made vulnerability about whether and how controllers could look to handle it later. ONO representatives for the trades said that they have approaches to guarantee that their workers can't compromise of delicate data. A Binance representative said that workers have a 90-day hang on any ventures they make, and that forerunners in the organization are commanded to report any trading action on a quarterly premise. Representatives for the trade said that they have approaches to guarantee that their workers can't compromise of delicate data. A Binance representative said that workers have a 90-day hang on any ventures they make, and that forerunners in the organization are commanded to report any trading action on a quarterly premise. Thank you for watching this video. Don't forget to like, comment, and subscribe. See you on the next video.